Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today, and if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now, in today's episode, I'm talking about the bull case for Polkadot, deflationary ETH, blockchain gaming, our usual 404 Logic Not Found segment, and more, so make sure that you stick around for all the updates that are in today's show. Now, if you like crypto, please do subscribe to the channel and hit the bell notification button, or you can follow the podcast on your platform of choice so you can get a heads up whenever I post new episodes of Crypto Over Coffee every single Saturday. Now, just a friendly reminder as well, please do be aware of scammers that are in the comments that are posing as me and other crypto YouTubers. It's also really bad on Twitter and Telegram and WhatsApp. I don't even have a WhatsApp, and I'm not going to ask you to contact me. So if the comment does not have the name highlighted like you see here, it is not me, and you can report them. So please be safe out there, and no, I will never ask you for funds or sell you something. Now, in partnership with the folks at Keystone, I give away a Keystone Tablet Steel seed phrase backup device in every single episode by picking a random commenter from the video and giving it away. So just for transparency though, the product is only available in select regions around the world. So if you win the random draw and you're from an unsupported region, I'm just going to send you Bitcoin instead, which is a pretty good prize, to be honest. The winner of last week's giveaway, that being said, is here on the screen. So big congratulations to you. And of course, I will be in touch. Now, my friends, let's kick it off today with a little crypto market update like we tend to do on this show every single week. And this week has been one of those sideways, pretty boring weeks in crypto. There hasn't been much insane price action to report besides, I guess, the Squid Game token getting rugged, which is just another sad example of a meme coin going kaput in a matter of minutes. And it's very sad. That aside, Bitcoin held the line above 60K, and Ether remains at around the 4,500 mark, which is duly impressive, to be honest. Altcoins have been kind of a mixed bag with very little to show for in terms of big moves up or down, which I guess is okay. And that being said, in light of the infrastructure bill in the United States passing with the shambolic crypto provisions in place, I think the markets are actually in a pretty good place considering. On that note, there is no need to panic about this yet, as we have until 2024 to fix this mess, and we will continue that effort until it is rectified. So there are opportunities to amend the crypto provisions and to fight these rules in court, so we shall see what happens. But for now, let's cross our fingers that the markets can absorb the fear here, and we can get back to our regularly scheduled programming. In other words, get back to some positive price action. Only time will tell, but for now, stick to your plan, folks, and remember, risk management is your best friend. Okay, a few weeks ago, I covered the really exciting news that the Polkadot parachain auctions would kick off on November 11th, 2021, marking the biggest launch milestone in Polkadot history. And parachains, for those unfamiliar with the term, are purpose-built blockchain networks built on the substrate blockchain framework that can interoperate with each other on the Polkadot network via a shared layer 1 network called the relay chain. Now, each parachain can vie for one of the limited parachain slots in the Polkadot network by essentially leasing that slot with the highest bid. And the bid is sort of locked up DOT. And right now, these parachain projects are facilitating crowd loans from their communities to build up the funds to bid on those first slots in the auction on November 11th. And crowd loans refer to the process of raising funds from DOT holders in return for some type of reward mechanism. And the funds raised for the crowd loans go towards the slot auctions, like I mentioned before. Now, I could talk all day about the mechanics of Polkadot and parachains and all that, but that's a video for another day. Yes, that is a hint. There is a video coming. I'm here to talk to you, though, about what this means for Polkadot projects in general and the Polkadot project itself. First of all, Polkadot has done well in the market based on its potential, but now it can really get set loose because it will have real tangible value flowing through it once parachains begin to go live after auctions are complete. You'll have DeFi powerhouses like Akala Network and smart contract platforms like Moonbeam bringing liquidity and utility to Polkadot, should they land one of the parachain slots, of course, as many expect that they will. And one of my favorite contenders is Manta, who is building a much-needed privacy-focused network on Polkadot. I mean, this is an entire universe that will begin to expand starting in November, and this is just the beginning. Technologically, Polkadot's first parachain actually has already gone live in the form of the shell parachain, which is foundational to the core operations of the network, like block production. Right now, the shell parachain is just a shell of what it soon will be. See what I did there? But it will gradually evolve into its fullest form, dubbed State Mint, which will perform the aforementioned core functions on the Polkadot network when parachains finally do go live and connect to one another on the relay chain. All of this suffices to say that one of my biggest plays this past few years has been loading up in Polkadot and loading up on Polkadot projects and then biding my time until this day came where everything begins to come together for the project. I've been talking about Polkadot for years. I'm an interoperability guy. I believe in this technology and its anti-maximalist ethos. And because of that, I think that Polkadot is fueling up to truly launch itself to new heights given these recent launches and announcements. In other news, something rather significant happened in Ethereum recently, as the fee burning mechanism implemented in EIP 1559 resulted in a full week of consecutive negative issuance. In other words, the total burnt ETH by way of transaction validation on the network outweighed the 2 ETH issuance from the block subsidy over the course of a week, resulting in a week of deflationary forces on the supply of Ether. Myself and many others postulated when EIP 1559 launched that we might see a window of hours or maybe a day or two at best for this type of behavior on Ethereum, but we wouldn't see any type of true longer-term deflationary movement in Ether's supply until Ethereum 2.0 comes to fruition and shifts the economic dynamics of the network. However, I'm surprised to see a full week of negative issuance like we did recently. I guess that's no surprise. This brings to fore, though, a few big thoughts. First, it makes it that much more clear that Ethereum cannot scale even close to the levels that the demand warrants. This means that block space is still at a huge premium. Fees are still sky high, but you already know that. For the network to be running at high burn rates like this for so long really just reinforces this fact. The second thing is that this burning does support the idea that Ether could be net deflationary in a holistic way when Ethereum 2.0 ships. It's not a guarantee in my opinion, but there's now evidence that it will and can play out like that. And third, the price of Ether is likely to react to this news, particularly if the negative issuance trend continues with sky-high demand for Ethereum block space for DeFi, NFTs, and gaming, etc. This is adding to the bull case for Ethereum, if you ask me, as an asset. But that doesn't change the fact that the poor accessibility for average users on Ethereum right now is simply untenable. So Ethereum 2.0 cannot come soon enough, and I'm very surprised that we saw a week of deflationary Ether. And I just mentioned gaming and NFTs, so I think this story, or well, 2 stories are actually worth mentioning. Firstly, I read an article this week about Electronic Arts, or EA as most people know them, discussing the future of the gaming industry and alluding to some openness to entering the fray related to blockchain gaming and play to earn. In recent earnings calls for EA, CEO Andrew Wilson called games with NFTs and play to earn features, quote unquote, the future of our industry, the future of the gaming industry, which is not saying directly that EA will imminently enter the space, but that they're actively looking at it and watching it. To me, this isn't surprising. And EA is one of those game companies that would be best positioned to get value from NFTs and play to earn in their existing IP. If you look at the pattern of their products around things like FIFA, for example, one of my favorite games, it's a wildly popular football game. And yes, football, the proper term for soccer. In FIFA, you already have an in-game currency and in-game items within the extremely popular Ultimate Team mode. And if EA could seek out revenues from secondary market transactions for those in-game items like player cards, as well as for transactions involving in-game currencies, it could be a huge revenue builder for them. And this is just one example, of course, but there are so many things that EA could do particularly well with its games related to intellectual property and brands like in sports. And they're not alone, because following this trend, the huge game studio Ubisoft also expressed its desire to be a leader in this burgeoning space. GameStop seems to be all in. surveying the market, planning an entry. I mean, we've reached full-on FOMO pretty much amongst the biggest companies in the gaming space. And that will inevitably expose the low effort entries from the true winners, the ones that really took their time to build something good. And so that's what I'm looking forward to. And speaking of gaming, actually, and Polkadot, to be honest, I'm really tying this episode together, to be honest with you, for the very first time in all 91 episodes of Crypto Over Coffee. It's cohesive. But anyway, one project that I have expressed my admiration for countless times over the years that I've been doing the show is Enjin, and one of the first entrants into the NFT space and gaming space in blockchain, the creator of the NFT token standard ERC 1155. That's Enjin. In the years since Enjin was first created, they've expanded work on several awesome projects, but one stands out in particular, and that is Efinity. Efinity is a purpose-built Polkadot-compatible blockchain that will deliver on a vision for low to no fee networking for minting and exchanging NFTs across an interoperable universe of blockchains. And it is one of the projects that I am most excited for that is yet to launch fully. Now, you might now immediately wonder what the path forward is for Efinity in terms of the upcoming parachain auctions on Polkadot. And I've got a full video coming on this topic as well, but here's the Cliff Notes version, and you can learn more about it on the Twitter for Enjin. Efinity is going to aim for a parachain slot late in the first batch of auctions around the early December timeframe, and will be facilitating its DOT bond fundraise using a crowd loan mechanism that incentivizes DOT lenders with a reward rate of around 7.5 to 9.75 EFI tokens, the native Efinity token, per DOT, and exclusive Founders Edition NFTs for the top contributors. Those who loan their DOT to help Efinity land a parachain slot in the fourth stage of auctions will definitely have some cool reward opportunities to consider. In addition to this exciting path to a parachain slot, the Enjin team announced the Efinity Metaverse Fund of $100 million to help catalyze the development of an open metaverse ecosystem, kind of like a counterpoint to the Meta project from Facebook. This fund will be allocated towards developers building in the NFT and gaming space in an effort to give more opportunities to these developers to bring their vision to reality. So it's really exciting times for the Enjin ecosystem, and boy, how far they have come since the beginning. I mean, lots of really cool contributions to the space. All right, let me shift gears here a little bit and touch on a tech-focused story that I actually meant to cover ages ago, but it just kept getting pushed out, and that is related to the content-focused blockchain network, Theta. A while back, I read a paper about a really fascinating patent that Theta had been awarded for content caching and delivery in a peer-to-peer style edge network. In English, Theta has one protection for their method for delivering high-quality video and content both for live streaming and on-demand applications using a mechanism that is compatible with decentralized networking mechanisms. It uses a combination of traditional content delivery network technology and a set of distributed edge network nodes and sort of peering nodes that help distribute content to one-to-many clients that consume that content. Anyway, how it works for the sake of this video doesn't matter as much as the implications of it existing. So Theta has amassed a pretty impressive suite of solutions to some of the most challenging elements of a content delivery system in the Web3 world. And it's only a matter of time before Theta really realizes its vision in getting each of these components working in harmony together to the extent that the orchestra that they're building truly plays the song that they are looking for. That analogy is crazy, but I swear it makes sense. 2 weeks ago, Crypto Over Coffee's headline story was that Elrond, the highly scalable blockchain network, would be launching its long-awaited decentralized exchange primitive, the Maiar exchange. The most common question I got from that video was, of course, related to what the specific dates were for the launch. You guys always keep me honest. When I don't have a specific date, you call me on it. So I figured I'd update you here. The launch will happen in a series of phases, the first of which will be on November 7th, which I actually think is tomorrow, when those who have earned the native MEX token from holding eGLD and self-custody, or stake that eGLD, etc., you'll be able to then, after claim on the 7th, provide liquidity to the platform on November 16th. And then shortly thereafter, on November 19th, you'll be able to farm that MEX token on the Maiar exchange. So I'll be very curious to see how the user experience is, because if the Maiar wallet is any indication, it should be super crisp and easy to use, and we will see the speed of the Elrond network. Finally, it has arrived. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Speaking of attention, if you want to help episodes like this of Crypto Over Coffee get some attention from the algorithm robots, please hit that like button, get subscribed, hit the notification bell, follow the podcast. It tells those robots that you're enjoying the content, that you want to see more of it, and others might also enjoy it. So thank you so much for that in advance. Now, let me ask you a question. Does it not drive you absolutely crazy when you read marketing copy, like marketing stuff that states, oh, we're the first ever this, or whatever it is? Like Apple does that. Drives me crazy. Like today, we're proud to announce the launch of our new token, which is the first ever token that represents real artwork. I mean, come on. We know that's not true. That's been done 100 times, 1,000 times. And that is the topic of today, my friends. And it seems petty, I know, but I see it all the time. You have crypto projects that just write bold-faced lies about the ingenuity or originality of their idea. And it's so unnecessary. There's nothing wrong with being second. Heck, third, 100th. If your product works better, if it does what it's supposed to do, if it provides value compared to other things that are out there, then you have a chance to make a splash. This is not one of those Ricky Bobby, if you ain't first or last situations. It's almost as if these teams think no one's going to notice when they write something that's just plain untrue, pretending that they're the first to do something groundbreaking that's clearly been done before. And they also think that this lie helps them promote their project. And here's what scares me about this. We already have a problem with FOMO buying in the crypto market. I mean, people will buy cryptocurrencies they don't understand with money they can't afford to lose because so-called experts on Twitter muse about, oh, it's interesting, or retweet something. When you mix that with blatantly false marketing and purposefully complex jargon to sound cool, you have a recipe for disaster. People believe what they read, for better or for worse, and there are ethical rules about how you represent your brand or your project if you're a project in this space. You're a business. Not only that, being first is not a selling point. Like, really? Are we 11? I mean, I was the first to finish my PB&J sandwich, or I was the first to collect all the trophies on Call of Duty. I mean, being first doesn't really matter that much. It isn't the only way to make an impact. Your product has to work, and it has to make people realize that they can't imagine not using your product. Being first and being quality can be beneficial, but quality always comes first. And as a community, I think we should be holding projects accountable for these instances of manipulative marketing. From my perspective, if you're not able to produce a compelling marketing pitch about your product without making fabricated claims, then either A, your product is not ready to be launched, B, it's not good enough, or C, you need a new marketing strategy. And any deviation from honest marketing practices, to me, barring honest mistakes where you thought you were first and you really weren't, is a 404 Logic Not Found. Alrighty, my friends, it is time for sponsor time, which helps keep my coffee cup full, which is very full because I haven't touched it today because I'm so distracted talking, but it keeps the show coming to you every weekend. First, I want to thank the long-term sponsor of Crypto Over Coffee, Ledn, who offer awesome BTC and USDC savings account products, collateralized BTC loans, and more. Ledn recently announced that they will increase their interest rate tiers for both BTC and USDC. We'll have 6.25 APY for balances up to 1 Bitcoin and 2.25 APY for any balance over 1 BTC. And additionally, the USDC interest rate is now increased to 9.5% on the full USDC balance. So I love seeing rates go up. Everyone does. And now part of a new onboarding program for new users is allowing you to get $10 in USDC if you make a qualifying deposit of $75 and leave it in Ledn for 15 days or more, and you use my link in the description below and of course the pinned comment. So if you want to start earning interest on your Bitcoin or USDC and get a little reward for doing so, definitely give Ledn a look. Thank you for that. And next, I'd like to shout out PlatyPunks, an NFT project centered around pixel art style platypi of various attributes. And today I want to share with you some pretty cool news coming out of the PlatyPunks camp about a sports industry collaboration that they've put together. It was announced that this week, Brandon Brown, a NASCAR driver, would have PlatyPunks prominently advertised on the hood of his number 68 car, actually today in Phoenix, Arizona. So it's pretty cool to see an NFT project featured as a sponsor for a sporting club. And actually, this car has quite a lot of crypto sponsors, which is really cool. So following suit with other examples of crypto in the sports industry like Crypto.com, FTX, and others being a big part of sports branding today. So if you want to keep up with the latest on PlatyPunks, you can check out PlatyPunks at platypunks.com and follow them on Twitter. Of course, I would be remiss as well if I did not remind you that NFTs are highly speculative, often illiquid, and there are risks therein. So please be careful, know those risks before making a decision to purchase any NFT, bearing in mind local regulations where applicable. So thank you to PlatyPunks for sponsoring a segment in Crypto Over Coffee. And like we always do, let's now do some community Q&A. I always answer questions from folks who watch the show, and I've got some questions from last week's episode that I'm going to answer, and I want to remind you that if you have a question that you want answered, no question is a stupid question. Leave them in the comments below on YouTube, or you can tweet me at Hashoshi4, and if you want to ask the question more privately to me directly, I've now opened my DMs on Twitter because I want to help as many of you as I can. And with that said, let's dive into these questions. All right, first question is from Julian L. Can you explain more about the ecosystem in Enjin, including the relationship of ENJ and EFI? Okay, so I actually talked about this a little bit in today's video. So Enjin is the sort of core project that's building in the gaming and NFT space. Enjin's built a lot of primitives in this space. They have a wallet with millions of users. They have, and that wallet is natively integrated with the ERC-1155 token standard, by the way, which is fantastic. And they built that standard, also fantastic. Enjin also is building a gaming engine to help feed games that are built upon blockchain primitives. They've been doing a lot in the general ecosystem around NFTs on Ethereum for a long time and expanding outwards now. Big part of that expansion is Efinity, the Polkadot compatible blockchain that's built specifically for NFTs. Low to no fees, scalable, lets you move your NFTs across different ecosystems and blockchains by way of Polkadot. They are their sister projects. The Enjin ecosystem encompasses Efinity. It's part of that space. This is a separate blockchain though, right? So Enjin and a lot of the tooling that's being built there, you have Efinity, which is a blockchain network, okay? You also have JumpNet, which is a layer 2, and that's basically a purpose-built layer 2 network that allows you to mint NFTs for free, right? And exchange them basically for free. JumpNet is sort of an intermediate solution to then theoretically move to Efinity from my perspective. And then you also have Enjin Starter, which is a launch pad, it's sort of another sister cousin project. It's a launch pad in the gaming and an NFT space. So Enjin Starter, just to be very clear with you, I did get an allocation in Enjin Starter when they first launched because I love Enjin Starter, love this space around gaming and NFTs. You get the idea. So just to make sure I'm very clear about where my biases may lie, Enjin Starter is another great project and another great addition. So you have this sort of holistic thing with the Enjin, the Enjin core, ENJIN or ENJ at the very center. You have Enjin Starter, JumpNet, Efinity, and maybe more projects that expand from that nucleus in the future. And so that's the relationship. In terms of the correlation of the price, that's not really my thing. I don't really track it, and I don't have data to give you a real answer there if that's what you're asking. But generally, the relationship between ENJ and EFI is just that they are sort of sister projects, but the tokens are not directly related to each other in any meaningful way from my perspective. So thank you for your question. All right, second question. We tune into all your videos because you genuinely want to educate. Thank you for the kind words about my channel. I really appreciate that. All right, with all the knowledge you've acquired at this point, if you currently owned nothing in the crypto space, where would you invest a disposable $1,000 in a high-risk, high-reward crypto? So normally I get to cheat with these questions. People are like, where would you deploy $1,000? And I say, I would split that between Ether and Bitcoin because they're the two biggest cryptocurrencies, and I feel that they have the most chance of being relatively stable. this is a direct ask for high risk, high reward. So you are going to get high risk, high reward. So what I think I would do right now is I would take that $1,000. If it's right now, if it's November 6th, Saturday, November 6th, 2021, I would take that $1,000. And if I'm in the US, I go on Kraken, I buy DOT. With that DOT, I would then either stake that DOT and try and play the parachain auctions and all the insane stuff that's about to happen in Polkadot. Okay, here's the thing. Regulations apply. A lot of these crowd loans and a lot of these projects aren't going to let US people do their thing. If you're circumventing that, that's your own deal. If you're outside the US and you're allowed to get into these parachain auctions and crowd loans, I would be doing that. So my play right now is the Polkadot ecosystem, just because of the proximity to the arguably biggest thing to happen in Polkadot ever. And the history that we have showing what happened in the Kusama space with all those projects. Just my perspective. So thank you very much, Jamichael, for your question. That's what I think. All right, third question is from Bob W. With all these different metaverses, will there be interaction among them in the future? Will some projects be able to integrate into different metaverses, and would those projects be ones to look out for? Bob, you are on the right track. You want to look for metaverses that are already talking about not being a closed ecosystem, right? So people always ask me, oh, do you like NetVRK? Talked about them on the show a lot. I actually might have talked about them last episode. Again, full disclosure, full transparency. I bought land in NetVRK, okay? I bought land in one of the early sales. Just telling you the truth. I bought it for a reason. So if I lose money on them, I'm okay with it. NetVRK, network, as they are pronounced, they are on their website even already pointing to the fact that they want to be an open ecosystem across multiple different blockchains, Cardano, Ethereum, etc. That's kind of what draws me to something like that. And there are other projects, like other metaverse style projects that are like, oh, we're going to be on one chain, but maybe we'll find a way to bridge assets. I don't know if that's totally enough for me. I think you should be planning for interoperability up front and allow people outside of the team to create things in the metaverse. But to answer your question, Bob, in a more direct way, yes, interoperability of metaverse is critical to achieving the metaverse sort of multiverse concept. It should be a universe of all these different interconnected worlds that you can move between and move assets between basically at will. That's what it really should be. It's not enough to just say, okay, we're going to create a virtual reality house that you can live in and like mess around in. I mean, PlayStation Home did that in 2012? I mean, that's not a heroic effort. The reality is that this needs to be a truly connected experience, creating a whole entire tertiary economy, basically, in a virtual world. And so ultimately, metaverse projects that don't think about interoperability now as they're building are the ones that are not going to succeed. And I'm going to be placing most of my bets on metaverse projects that are thinking about that, creating an open metaverse, not a closed one, which is my criticism of Meta, formerly Facebook, because I don't believe that they will create an open metaverse. I think they will create a closed one where they have full control. And that's antithetical to the whole idea of the metaverse from my perspective. So thank you for your question, Bob. What do you think about it? Let me know in the comments. All right, and then my last question of the day is from Twitter, and I'm sorry, I missed grabbing your name, so my apologies. But it says, hey, Hashoshi, how to spot a new NFT project that can have big potential. Okay, this is tricky because I'm not going to sit here and tell you that I know the magic sauce, because if I did, I would have picked every great NFT. Okay, it's not that easy, but I'll tell you what some of the things that I would look for would be. Both what to look for that's good and what to look for that's bad. Let's start with the good stuff first. You want to look for a community that is openly active on Twitter in a way that's not buy this NFT, shill this NFT, let's do a giveaway and get the account more followers, or tweeting things like, project blah, 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 21K followers in 2 days. Okay, that's not like that's not marketing. That's just weird stuff. Okay, you want to look at projects that have sort of organic following, that have a solid, very clear roadmap for how the token has utility and what value it has for the community. That could be events in person. That's cool. That could be, exclusive access to drops. That could be exclusive access to mini games that are coming to earn accessories for the NFT. There's all sorts of things that it can be, but if that roadmap doesn't appeal to you and you're not like, wow, I'm excited to hold this token in 6 months, probably a bad sign. The other thing is, you don't want to see in general when you go on, if you're coming in after mint, you don't want to go on OpenSea or one of the marketplaces and see that you have a bunch of floor price NFTs for sale and no one's buying them, or that people are constantly sniping below floor price. That's not good, because it means that the tokens that you buy have no exit liquidity, even at the floor, which also means that no one's going to buy more rare versions of that NFT that are more expensive, at least not for now. It's just, that's a risk, right? And I've done that. I've bought floors. I've even minted NFTs where I can't even sell them on the floor because there's no exit liquidity. That's why I say NFTs are often illiquid, because they are. So that's another thing. And the other thing is, I would much prefer, and listen, this is controversial because I really, really believe in privacy. And I think everyone has a right to be anonymous or pseudonymous. But the reality is if you're creating a project, particularly an NFT project, and you're an artist, I want to know who you are. I want to know the team behind that project. I want to know your intentions. I want to know your vision. I want to engage with you, because humans make decisions based also off of how much they trust a person. And I can't really decide whether I trust you if I don't even know who you are and I can't interact with you. So I generally like to interact with pseudonymous, maybe, but mostly like doxed or public founders. Just my personal preference. What to look out for on the flip side that's bad. An unhealthy focus in the Discord of how to pump the price, not good, because it means there's no exit liquidity. Like I mentioned on OpenSea, that there's no exit. I guess that was the negative that I described in the positive. So I'm all jumbled on this one. But the reality is, you want to look for the fact that NFT projects have a healthy community, an engaged community that's not focused on shilling and trying to flip, because those flippers, as soon as you get some traction, they're going to dump and they're going to crush the price and they're going to suck up all the liquidity. That's just the truth. Right. So you saw it. Good art is not enough. Metaverse, some of the coolest flat art that you can get, fell flat because it went too crazy, too fast. It was so much focus on making money. People bought them for insane prices. Now they're not worth all that much. So it's not a perfect plan. You will still miss probably 75 to 80% on the NFTs that you buy, and that's just the way it goes. I'd say that's probably my ratio. I've done well on maybe 20% of what I bought. So that might be terrible. Maybe I'm just bad at NFTs, but that's my experience. So thank you for your question. And that is going to do it for the questions today, actually, folks. I want to thank you so much for watching this and every episode of Crypto Over Coffee that you've watched. If you have time to stick around, I will leave 2 videos for you to click here on the video screen, because who doesn't like to keep the crypto party going? But most of all, I wish you and your family a wonderful week ahead. And until next time, cheers.